Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES pulled back towards the 2100 area, which was a prior area of resistance, which now acted as support, and buyers were active there. And overall, we've seen a very balanced and two-sided overnight session, and we have a very defined balance above the 2100 all the way up towards the 2110 area from yesterday's high. So at this point, heading into the open, we know that the market is in a very balanced state on the smaller time frames, and it's very likely to break one way or the other. Now, the larger time frame bias continues to be bullish, and that would remain bullish even if we broke below the overnight low. That is a big picture idea, and that market structure is not really going to be impacted by any short-term movement. But on the smaller time frames, we are opening near the 08 quarter to 10 quarter initial resistance zone. That marks yesterday's high as well as the overnight high so far. And we are going to have to see continued upside momentum and broad market strength in order to get that breakout and go up towards 15.5 to 17, which marks the all-time high in the S&P. So at this point, the market is trading at a fairly aggressive price, and simply a lack of strength in the market can result in a failed breakout attempt here on the smaller time frame. So we do have to be careful now initiating longs at aggressive prices if there is no underlying momentum or if there's a disconnect on the advanced decline and the price of the S&P, or just a simple lack of strength on the broader market, or a failure for the Russell to break out. So now the onus is really on the buyers up here to continue pushing ES higher. And for that reason, it makes sense to be a little bit more conservative. That doesn't mean that you stop trading on the long side. It just means that we have to now see a little bit more from the buyers to really sustain these higher prices and continue pushing higher. On the upside, in the event of a high momentum breakout above 08 quarter to 10 quarter, we have 15.5 to 17, which again marks the all-time high. That is still an area where we can see some profit taking, we can see some selling. Beyond that, there is no hard resistance in the market. Beyond 2117, the resistance zones that we have are really based on the current level of volatility and the range potential of the day. So 2175 to 2375 is not this hard resistance area, but by the time the market gets there, given the recent ranges in volatility, it will likely be exhausted. And for that reason, the 2175 to 2375 zone can still be an area where we get a sell response. Now, of course, that depends on how the market's shaping up in real time as well. If it's a trending day or there's just sustained upside momentum, then you wouldn't be looking to short a market like this anyway. But at 08 quarter to 10 quarter, this is really the short-term spot where buyers really have to be active and present. And this is a spot where if there's a failure or if there's simply a lack of strength, and same idea with 15.5 to 17 even, that's key resistance, simply a lack of upside momentum and a lack of strength can result in a pullback. So we just have to be careful if we're initiating a long from that aggressive price. Now on the downside, we have support at 99 quarter to 2102 quarter, and right above that we have the gap and previous VPOC at 2103. That is really the key support on the smaller time frames. As long as we can hold above 99 quarter to 02 quarter, it tells us that the market is still in a short-term balance, and the overall bias, even on the smaller time frames, can remain fairly bullish. Now, if we get a failure and a breakdown below 99 quarter, then on the smaller time frames, it tells us that the sellers are gaining a little bit of control. It does not impact the bigger picture bias at all. On the larger time frames, the support zones below 99 quarter are still valid, and they can still attract responsive buyers on first test. So in the event that we break below 99 quarter, we can go down to 95 half and 90 half to 92 half, and every support zone on the way down can attract responsive buyers on the day time frame, and it can even be a zone where the market completely reverses and goes back up towards 99 quarter to 02 quarter and back into the overnight range. So given that larger time frame bullish bias, even if we break down below the overnight low, unless we are seeing excessive weakness where it's developing into a short-term correction or a trend down day, we can still consider taking longs at those support zones below, and at least look for decent reactions at the zones. It doesn't mean that it has to be a huge bounce, but even if the market's weak below 99 quarter, we can still get enough edge off of 90 half to 92 half, 89, 85 to 87 half. Those are still very decent support areas for buyers to step in on the day time frame and at least result in a 5 to 8 or 9 point reaction, which is more than enough to get 2 to 3 R out of that trade setup. So right now, heading into the open, because we're opening new resistance, we have to be a little bit cautious because this is short term, a potential spot where we can get a failed breakout attempt if there is a lack of strength in the market. And that's the important point to pay attention to here, is that we do not have to see weakness for the market to fail at 08 quarter to 10 quarter. You actually will rarely see weakness at this kind of price area. It's the lack of strength that can result in a failure at 08 quarter to 10 quarter. So if the market's trading at initial resistance, but the advanced decline line is flat or negative, and there's just simply no upside momentum on the NYSE tick or in the price action across the other markets, that alone is going to be enough to attract sellers at this zone, or even at 15.5 to 17. We're not going to see outright weakness up at that zone. By default, we are going to be seeing short-term strength. It's just we have to gauge the level of strength up there and determine whether it is sufficient to support a sustained breakout and a directional move up to 15.5 to 17. So that's really the key thing we're going to look for off the open, whether there is enough strength to support a breakout, whether there is sufficient momentum to support a breakout. And, absent any strong buying up at 08 quarter to 10 quarter, by default, we can get some profit taking, and responsive sellers can be active for a move back down to the gap fill to initial support. And then depending on how we approach that zone, we'll have to determine the same thing on the downside. Now, is there enough weakness coming into the market to really support a move back down towards yesterday's lows? So those are the main ideas heading into the open. Let's see if the buy side can maintain control and continue to be aggressive at these higher prices, and we'll take it from there.